All right, good morning, everyone, and happy Sunday. Okay, couple things for the week ahead. I think the most important thing to keep in mind is that we're trapped inside of a big old box. We're not in an uptrend, we're not in a downtrend. We are chopping. So this, of course, can make swing trading a lot more difficult. You don't have too much wind at your back. So the key here for swing trades, and I think even for really good day trades, is we're trying to time our trades with the move in the indices either towards the bottom end of that range or back towards the top end of that range. So for example, for all of you in my mastery, when we got short McDonald's and AMD, we finally got our paycheck when the S&Ps flushed towards that bottom end. Then we turned around and we got long Pinterest. Pinterest worked because the S&Ps rallied back towards the top end of that range. Last week we were short ADI, long MRO. Neither of those trades worked really well because we didn't get a move towards the top end or the bottom end. Rather, we got that cluster you-know-what right there towards that midpoint. So as far as the timing goes, and keep in mind we do have the Fed, I believe, on Wednesday. So subject to change. But right now I am seeing a few things that point towards it would be easier this week for the market to go towards the bottom end of that range as opposed to rallying back towards that top end. First thing here would be the scoreboard. The Bulls have 0 points and the Bears got 3. So structure, momentum, moving average crosses, stacked EMAs, weather patterns, everything points towards the Bears have got a little bit of an edge. And then your lower time frames heading into tomorrow, 2 hour sell signal, 1 hour, 30 minute, 15. They also point towards easier for a flush towards that bottom end. So the S&Ps are not looking fantastic. And then we continue to see signs of strength here in the dollar. The buckaroo is moving and a grooving. Buy signals on the daily chart, the 4 hour, 2 hour, 1 hour, and the 5 minute. And as of last week, we have a weekly squeeze that just begins to fire to the upside. So strength in the dollar, no bueno for the market. And then Apple, I think, has been a problem here for really for the last few weeks. And keep in mind, the only thing trying to keep the ship afloat is Amazon, Google, Meta, and Microsoft. You've got a couple of heavily weighted tech stocks trying to save the market. And then meanwhile, the biggest of the bunch, Apple, looking mighty suspect. Mighty suspect. Under the 50, under the 21 EMA. Daily sell signal, 4 hour sell signal, 2 hour sell signal. So tough to think the S&Ps are going to rally back towards all-time highs if Apple has sell signals and the dollar has buy signals. Meta can try really hard. And Meta's been trying. Amazon can try really hard. And Amazon looks pretty solid here. Google looks really good. Google can try. Microsoft can try. No matter how good they look, it's tough to see a sustainable rally. When the S&Ps want to go lower, the dollar wants to go higher, and Apple's got issues. Knowing that Google, Microsoft, Meta, Amazon are the only 3 or 4 stocks trying to save the market, if they begin to break down, pretty good chance you do see the S&Ps back towards the bottom end of that range. And the way that we can quickly figure out, okay, it's just it's a market of a few stocks trying to hold it all up, is when you look at the RSP. The SPY, the SPX, because of the weighting, there's the influence from a few of those heavily weighted stocks. 90% of the things in the S&Ps can look like crap. But if your Apples, your Amazons, your Googles, your Netflixes, if they hold up, it kind of skews the picture. So the RSP here, the equal weighted index, tells the truth, the whole truth, and nothing but the truth. The RSP, on my indicator, sets up for the perfect short. Big 3 squeeze, A+ setup. Price is under the 50, under the 21 EMA. Got a daily squeeze, you got sell signals. If this takes out the daily 200 SMA, should be setting up for a pretty big flush. So again, if we lose that little bit of strength in the Metas, the Microsofts, etc., everything else is already leaning towards, yeah, we want to go lower. So with Friday's close, if we jump over to the QQQ here, Friday's close does not leave the bulls in the best standing here, even for the QQQ. We get a negative shift in the scoreboard. Bulls have 0 points, the Bears have got 3. Despite the rally, we never got a positive momentum cross. So they never fixed their momentum issue, and now heading into tomorrow, there's a structure issue with price under the 50 and under that 21 EMA. The 1 hour, 30-minute, 15-minute charts, they offer a little bit more clarity. They're printing sell signals, and if they're printing sell signals under your daily moving averages, easier for a flush. So keep those things in mind heading into tomorrow, and then I think take consideration to, we're not in an uptrend, we're not in a downtrend. Therefore, what we don't have on a bigger picture scale is clarity. Tough to look for a trade where you want to get long for 2 or 3 weeks. And then I think just as tough to look for a trade where you want to get short for 2 or 3 weeks. That kind of sustainable trend, which is ideal for swing trading, that all gets easier when we're out of the box. So in the context of a box, and in the context of trying to catch a flush towards the top end or that bottom end, where I think you can find a bit more clarity is take the squeeze, and then look on your lower time frames, the 1 hour, 30-minute, 15-minute, 5-minute. That's where you can find some clarity without the need for a move that lasts for 3, 4, 5 days. You take a 15-minute squeeze, for example. So Google from Thursday. And then the key is for our day trades or for our trades on lower time frames, we're looking for as much edge as possible. So there's the setup, there's the sector, then there's the overall market, and then there's the internals. So back on Thursday, Google prints an A+ squeeze on the 15-minute, got the squeeze and the buy signal. So as far as the stock itself, that gets a check mark. Now, if I'm going to get long Google, even if it's on a 15-minute chart, right? Even if it's a trade that might last for 15, 30 to 45 minutes, I want to make sure everything else lines up. So I'm going to go check the S&Ps and the Qs. The first thing I'm going to check is the scoreboard on the daily charts. Back on Thursday, the scoreboards still favored the bulls. It tells me my daily chart is at least stable. Then I check my lower time frames. Both the S&Ps and the QQQ, they had 5-minute buy signals, 15-minute, 30-minute, hourly. Right? Everything from the ground up across those lower time frames was poised for a move higher. That kind of action in the indices is going to be helpful if I'm trying to see Google higher. And then I check the sector, right? Other names in the sector. I'm looking at Meta, I'm looking at Amazon, Apple, I'm looking at Microsoft, etc. They all look pretty good as well. Their 5-minute, 15-minute, 30-minute, hourly charts, they also had buy signals. And then my favorite internal is the advanced decline. So on a chart off to the left, I'll throw on the advanced decline. And if I'm going to buy calls in a Google 15-minute squeeze, I would at least like for the advanced decline to be at a positive reading. And if anything, trying to grind a little bit higher. So back on Thursday, advanced decline opens up at positive 1,500. Everything leans bullish. When I bought Google, I got a little bit of a pop there. So the advanced decline leaning bullish, the advanced decline being stable, right, not heading back towards the zero line, and then the advanced decline getting a little bit of a pop. Helpful for the Google trade. So the internals confirm what I was looking for. Right, things are leaning bullish right now. The buy signals on the S&Ps and the Qs confirm what I was looking for. Everything's poised for a move higher right now. The other tech stocks look good, and then Google offered me the A+ setup. What I'm doing here, guys, is the same thing that, come on back now. It's the same thing that I would do on a weekly chart or a daily chart for a swing trade. I've got a beautiful squeeze. The squeeze tells me, hey, we're gearing up for a move. I've got the buy signal arrows telling me inside the squeeze my momentum, my structure, everything that I care about is aligned for a push higher. There's a good probability that squeeze fires to the upside. The market checked out, the internals checked out. It's my swing trade on a lower time frame. The entry, the execution, the timing, nothing changes. What changes is the speed. I'm going to be right or wrong a lot quicker on my 15-minute squeezes than I would be on a weekly or a daily. And then the final piece of the puzzle is risk versus reward. So when I took the entry here on Google, the target was 138. Had my target labels up there at 138. The exit on the trade would be the same exit had it been a daily squeeze. I want to buy it above that 21 EMA, ideally as close to that 21 EMA as possible, and then that becomes my anchor. That becomes my line in the sand. If we break under the 21, if I lose the 15-minute buy signal, taking the trade off, and I'm moving on to the next one. Now, the way I traded Google here was pretty aggressive. I bought the 138 calls that expired on Friday. So on Thursday, that's 1 day till expiration. Couple of strikes out the money. I lined up my strike selection with my target on that 15-minute squeeze. So the worst case scenario was that the 138 call went to zero. Google falls apart, Google trades sideways, the calls expire worthless. So for easy math here, say I risked $1,000 on that trade. The max loss on that trade would have been $1,000. In that 30-45 minute window, the push into that 138 target had those calls up about 270%. So I risked about $1,000 worst case scenario. And mind you, I'm not going to sit there and take max loss. It breaks under the 21, I lose my buy signal. We hit in the road. Worst case scenario, I lose $1,000. If I catch the push towards my target, I make about $2,700. So I am going to cover that trade in a bit more detail in an upcoming video. But the point being, guys, that gave me a moment of clarity. In a market where bigger picture, we don't have too much of that. We're not in a daily uptrend. We're not in a daily downtrend. So if you can time the moves in the indices towards the top end and the bottom end of that range, that is your window of opportunity to be swing long or swing short. We got short McDonald's, we got short AMD. The trades did not work until the S&Ps puked down towards 43.50. I think the same applies to your day trades. Now you can find a really good day trade, such as that Google example, even if you are in the box. Trading back and forth around that 21 EMA. Where the swing trades get better is if you get that 2, 3, 4 day window where you're going towards that bottom end or towards that top end. So, something to take into consideration this week. Take your go-to setup that you would typically swing trade on a weekly, a daily, a 3-day. Look for that moment in time on a 5-minute, 15-minute, 30-minute, or an hourly. And make sure you pull the trigger when you got as much edge as possible. If I'm getting long Google in a 15-minute squeeze at 136, and I'm looking for a push towards 138, do the internals support that push? Do the buy Do the buy signals on the indices support that push? Do the signals on the other stocks in the sector support that push? Whether it be for 5 minutes or 60 minutes, in the context of a big old box, a big old choppa, you can find some clarity and you can find some nice trades. So, all things to keep in mind. And then, we'll see if the problems get better this week or if they get worse. One more thing I did want to show you is the semiconductors here. If things don't change, the market is losing soldiers. Along with your tech stocks, the semis were trying to keep the ship afloat. Some daily buy signals, a little bit of structure coming through. Bam, right back down. Sell signals on the daily all the way down to the 15. AMD looks like a hot mess. And I tell you what, I might look for a short this week in AMD. It feels like it's got some meat on the bones. A daily squeeze, a 2-day squeeze, a 3-day squeeze, and a weekly squeeze. Sell signals printing on the daily chart all the way down to the 15. You probably look for a flush down towards the daily 200. AMD's a hot mess, and then NVDA is big sketch. Big sketch. So ever since June, NVIDIA's had a momentum deficiency, right? Very deficient in vitamin M. Momentum peaked in June. It's been on an overall decline ever since. They've continued to try to push this higher and break it out. 1 failed attempt, 2, 3, 4, 5. They never fix momentum. They take price from 400 to 500, and they still drop the ball. Momentum goes up, and then right back under zero. So now NVIDIA's got this big triple squeeze. A daily squeeze, a 2-day squeeze, and a 3-day squeeze. Momentum on the daily squeeze below the zero line does not support it firing to the upside. Momentum on the 2-day squeeze below the zero line does not support that firing to the upside. And then that Momo on the 3-day does not support that squeeze firing long under the zero line. So the dollar is strong. Apple looks awful. NVIDIA and AMD look suspect. The RSP looks like a short. It all makes for an interesting time to be a trader. So there you have it, guys. Short and sweet, right to the point. We're in a big box. Whether you're day trading, whether you're swing trading, it gets a little bit easier if you can catch a move towards the bottom end or that top end. Based on the dollar, based on the scoreboards, based on all the lower time frame sell signals, until things change, I think we're heading into this week with the thinking that right now, it would be easier for a flush back down towards 435 than for a rally back towards 555. But all right, y'all, for those of you in the mastery, thank you for being a part of the team. For those of you watching on YouTube, I appreciate you watching. If you haven't already, hit the like and the subscribe button, and I'll see y'all tomorrow morning at 7:45 a.m. Central here on YouTube and over in the Essentials room at Simpler Trading for some pre-market prep. Until then, guys, be good, enjoy your Sunday, and I'll talk to y'all soon. Adios.